Hello and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer is here to educate and inspire you about the world of crypto and NFTs.
We'll do deep dives into critical concepts for understanding what's happening and discuss the current events shaping the space.
We're making this podcast for the curious, the free thinkers, and the change makers that propel us forward.
As we embark on our adventures, remember that none of this is financial advice and crypto can be risky.
In this episode, we discuss strategies for gaining exposure to crypto through more traditional means and the legacy financial system, such as some stocks that you might be able to get or some IRA options and some other credit cards that are coming out, debit cards that are crypto friendly.
And what makes this really important is that there's a lot of people that we've been talking to lately that want exposure into crypto, but they're a little intimidated to hold their private keys or take custodianship. So can we tell our listeners at first, Colin, what is custodianship? What are we talking about here?
Yeah, so it's custody and non-custodian. But yeah, so I'm excited to talk about this with you because this is a topic that comes up a lot because you come to meet people who are crypto curious. They've heard about crypto. They are maybe wanting to invest a little bit, but maybe they're not quite ready to hold their own private keys, right? Which is like taking custody of your assets versus like a bank where a bank holds your assets for you, right? So if a normal stock, when you buy a stock on a normal brokerage firm, they buy the stock, they hold the stock, they have custody of the stock for you, and then if you want to sell, then they sell it on your behalf. So they just kind of put an IOU next to the stock that says this is Cash's stock. And banks, they hold your money for you or your other assets. And so in crypto, what's different is that you take custody of your own assets, which then with your own private keys comes great responsibility, right? Because you are your own bank essentially. And so if you lose your seed phrase, if you lose your private keys, they get compromised somehow, there's risk there, right? Unlike if at a normal bank, if you forget your password and you can't get in, they have a means for recovering your password. And also you can, get customer service and you can go into a physical bank branch. So, this episode is really kind of like a stepping stone for a lot of people. It's okay, maybe they want to dip their toes into crypto, but they're not ready to go full in yet. Mm-hmm. And so we really just want to kind of give people kind of the crypto Lite, essentially, of how to kind of get some exposure and share people some of the tools they can use.
Yep, because there's a lot more usefulness out of crypto when you do take take use of your ownership of your private keys. But right now, we want to let people dip their toes in, invest a little bit, put $1,000 into crypto, and see what happens with it. Right. So for those people, this is the episode to get exposure.
Yeah, and remember, none of this is like financial advice. You need to do your own due diligence, your own research. But we do want to let people know that there are tools that have been created out there by different companies that let you get some exposure through crypto through traditional means. Maybe also you work for a certain company and you can't hold crypto assets on your balance sheet yet due to the regulation around them or non-regulation. There is that gray area that does exist. Or maybe you have some investments with a certain brokerage firm that you like and they don't have like a certain kind of way to get into crypto directly yet, but they might have some other options that you can do.
Speaking of that gray area, we got Grayscale Trust as the first on our list.
Yeah, so pretty much like one of the OGs in this kind of space is the Grayscale Trust. And what they do is essentially they have a few products that they have created that buy and hold crypto assets. So they have the Bitcoin trust, they have an Ethereum trust, they have a Solana trust. And what they do is they buy Bitcoin, hold it, and then they issue shares of this trust. And so it's meant to track the price of Bitcoin and Ethereum, whatever the asset that it has, right? But it doesn't always track it perfectly. But yeah, no, there's a difference between a trust and an ETF.
Right. So exchange traded ETFs, right? So the funds that are on an exchange, they have to be kind of backed by a certain unit, right? Compared to the trust, which can have like endless inputs at it.
Yeah. So they're a little different in that the ETF is like it's like a stock essentially.
Yeah, traded on the SEC.
Yeah. So, and a trust is like you're buying individual units that you could essentially, in theory, redeem for that asset, but and it's in theory, right? But something to keep in mind is that the Grayscale Bitcoin Trust is the oldest kind of vehicle in this space. They've been around since 2013, and at one point it was the only way to really gain exposure to Bitcoin for a lot of people, and that because of that, they have a lot of legitimacy in the industry, and people trust them. I actually have used Grayscale Trust for one of my IRAs because it's locked in this this
right.
IRA. I can't get out of that space, but I can buy the Ethereum trust, which is the symbol is ETHE, and like I said, if you go on their website, you can kind of explore some of the different things that they have, some of their different products that they have. They have a digital asset fund. They have, like we said, a Solana trust. They have a few different other products too. So it's it's a really cool option that you can, it's traded on most brokerage firms have access to it, like Fidelity or JP Morgan. And I think it's a good stepping stone. We're kind of in this space now where ETFs are starting to be, issued. There's just a few we're in the beginning stages, right? The SEC is kind of picky with issuing these crypto tools, these ETFs, but they're starting to. We have ProShares Bitcoin Strategy ETF launched its Bitcoin futures offering, which was the first Bitcoin pegged ETF to debut in the U.S. markets. And then since then, two other Bitcoin ETFs have emerged. There's the Valkyrie Bitcoin Strategy ETF, and then there's a Van Eck Bitcoin Strategy ETF as well. And those are also some other options. So I expect this space to continue to expand as, regulation starts to get more fleshed out and the SEC starts to see more of a framework. I know they did just deny another company, and there was a recent rejection that the SEC said because it didn't protect investors strong enough from fraud, and so they denied one too. So they are starting to allow some of these ETFs to exist, but I think most of these are still futures linked offerings, and they're not spot market ETFs. So that's a different thing to keep in mind too. Is they're not trading the same price of Bitcoin that you're seeing in the spot markets that you're seeing on a Coinbase or a centralized exchange. They're futures markets.
Interesting, right? Okay, and like you said, this space is growing incredibly fast. The Grayscale Trust had $2 billion in assets a year or two ago, and in September they reported $40 billion in assets. So they really are eating up the space and getting a big share.
Yeah, and I like I said, they're poised to be one of the bigger players in this kind of crossover of crypto digital assets into the legacy financial space.
So if people don't want to do a trust, there's some credit card options, right? Cash back.
Yeah, so you can earn cash back in crypto. That's pretty cool.
Screw airline miles.
Yeah, yeah, right? Who cares about airline miles when you can get Ethereum or Bitcoin or whatever crypto that you want in your cashback rewards transactions. So there's a whole list of crypto-friendly credit debit cards, reward cards that have been launched and that are kind of in the pipeline right now. And we're going to go over some of the major players in that sphere and just give you kind of an outlook of what some of the cards are, what some of their features are, and just know that, if you want to slowly get into crypto kind of in another way, you can, without ever actually having to buy crypto, right? Maybe you don't want to spend your own money on ETH or on Bitcoin, but if you had a debit card or a credit card that every time you swiped it, you got a little bit of Bitcoin that just was bonused to you, maybe that would work. Maybe that feels better because you're not really feeling like you're risking your own money and you're still getting some
right. It's a reward.
Yeah.
Yeah.
And speaking of reward though, but you're getting an asset too that is apt to appreciate, right? Whereas airline miles, if you hold on to airline miles, right, most of them expire, right? Or the airline can change the rules on you anytime, and they're these miles used to be now used for this, and yeah. So when you think about it, would you rather get an asset that's loses value over time, especially if you don't use it, and the companies that control it could just change the the rules anytime, or would you rather get rewarded in an asset that appreciates in value and also has like monetary, a harder monetary policy around it, right? It's like the monetary policy around Bitcoin and Ethereum and some of these other reward cryptocurrencies you can get through these cards are pretty much set. So
right.
So you're going to get an asset that's appreciating. So even if you just like went shopping, never bought any, never actually put your own money to any Bitcoin or Ethereum, and you used your card enough and just let it sit there, you know, in 10 years from now, it might actually be a nice chunk of change.
Yeah, you're absolutely right. One in particular had a billboard over Central Park in Manhattan a month ago. Our friends over at Gemini are branding pretty hard. And
that's great.
I'm bummed they still haven't released the credit card yet. But they will be 1.5% cash back in the crypto of your choice.
Yeah, cool. So Gemini is a crypto exchange. You might be familiar with it. It's a centralized exchange, but they've been advertising plans to have a card released. I don't know. Eventually, they've been on the waiting list for a really long time.
Yep.
We're definitely excited for their card to launch. I think it's going to be probably one of the better ones in the space. Some of the other ones that are around, there's Crypto.com, and that's an interesting setup because it's a Visa-friendly card, but it's like a prepaid card. So, you know, like a debit card, you have your funds and you can swipe it. But this, you have to like load up, like top off with a certain amount of funds, and it links to your bank account. But you have to like physically like, you know, add more funds to it. You know, you can from a debit or credit card or with crypto, and then you can spend that. The weird thing is, though, to get eligible to apply for one, you have to get some Crypto.com tokens, which are CRO is the symbol for the tokens, and you have to stake them for 180 days to become eligible. And that's just like the basic. And then there's different tiers. So there's like a black card, and then there's a red one, and like there's a blue one, and they all have different bonuses and rewards. Some of them get more cash back or more rewards back, more crypto back. Some of them even give you like discounts on hotels and Airbnb and things like that. There's some like really interesting perks, but it seems like it's kind of a process and it's kind of gimmicky to me that you have to buy their token. But I get what they're trying to do.
Yeah, you know, why do they want that? They want liquidity? Why are they wanting?
They're trying to pump their token.
Gotcha. Okay.
Yeah, I mean they're trying to build an ecosystem with their token. I mean, Crypto.com has big ambitions. You know, they just bought the naming rights for the Staples Center in Los Angeles.
Crypto Stadium, baby.
And then they have Matt Damon, you know, as their spokesperson now. So Crypto.com is like really being aggressive here, and this is another move, I think, you know, with their token and linking the token mechanism, the tokenomics with their credit and card or debit card that they're issuing out is a really big move, I think, to create this ecosystem where they're can kind of like you go to Crypto.com and like you probably won't want to go anywhere else because you'll have your card there, you'll have your wallet, you'll have all your exchange because it's also an exchange. So they're trying to really corner the market. And then moving on to some other cards, there's Nexo. And Nexo is pretty interesting because it's not a credit card or a debit card in the way that we think of it usually. It's more crypto-backed loans. So you would deposit some crypto into your Nexo account, and then essentially you can take a loan out against the crypto. It's like a collateralized loan.
Interesting. Kind of like Alchemix, where the crypto pays the loan back itself.
Well, this isn't DeFi, so like in the sense that the loan's not paying itself back.
Okay, can we get that credit card?
The Alchemix, yeah, no, maybe. I would love to have the Alchemix card. So the Nexo card is like you could deposit your ETH or your Bitcoin, and then say you put in like $10,000 worth of Bitcoin, right? The value of it is an ETH or whatever. Then you can take out a loan up to probably like, I think it's maybe 80%. I'm not sure what the threshold is, but so you could take out like $8,000. You could spend up to $8,000 on that card, but then you'd have to, you have to pay it back eventually.
Gotcha. Well, let's get that DeFi Alchemist card going.
Yeah, right. That's what we really want. So Alchemist guys, if you're listening to this, that's the next step. But and then there's another one called Wirex, and that's similar to the Crypto.com card in that there's a token WREX that you have to buy and stake. And so it's interesting to see some of these crypto credit debit card companies getting into the token space and using this token functionality intermixed with the credit cards. So we'll see where that goes.
Let's go, Gemini.
Yeah, Gemini, hurry up. We want your card.
It's my birthday in June, so that'd be a nice birthday present, Gemini. But if we had staked our Crypto.com 6 months ago, which is how long we've been waiting for the Gemini credit card, we'd have a credit card by now.
We'd have one by now.
So I'm pretty excited. I can start divesting my IRA in the next week or two, which obviously crypto can be risky, so I probably won't do 100% of it. Probably only 95%. We want to be not too risky. But I mean, I'd say airline miles are more pixie dust than Ethereum at this point. So I'm excited, and there's some pretty good self-directed IRAs out there, and ways where you can get some exposure in your retirement account, because a lot of providers for retirement accounts aren't actually allowing crypto to be in the portfolio yet, like what you're saying earlier in the thing, there's just being a little bit more risky. So if you can divest, there's some independent retirement accounts out there that are good for people. So there's a Bitcoin IRA with investments who can avoid capital gains tax because it is an IRA. And then there's a few other ones that have Ethereum as their main one as well. So I'm excited because it's something where put it in and not look at it for 40 years and see what happens with the IRA.
Yeah, there's a handful of companies that are specializing in these crypto IRAs, and I think they're a great solution. Like you mentioned, to avoid some of the tax events that you can incur with crypto. So if you are in crypto for the long haul, maybe think about putting some of your IRA funds into a crypto IRA and letting that compound for you over time. And with this, you said that you got some exposure in the Grayscale Trust, and were you using some retirement funds in that? Yeah, so I have an IRA with Fidelity, and with Fidelity they list the Grayscale products. Gotcha. Okay. So it's a self-directed IRA. So yeah, so if your IRA, some of them are more structured than others, but if you have an IRA that's self-directed, or if you can change your IRA from a managed IRA to a self-directed IRA, then you can see maybe your brokerage firm offers and lists some of these Grayscale products. So that's essentially what I did. My IRA is self-directed, so then I can choose whatever investments I want. And Fidelity does list the Grayscale products, like ETHE, which is the Ethereum Grayscale Trust. That's the symbol. And then there's GBTC, which is the Grayscale Bitcoin Trust. And there's a few other products that they do have on there. So, one step to do is maybe if you can't necessarily get, or you don't want to go through the headache of shifting your brokerage firms completely, maybe you can switch to a self-directed IRA, and through that way, then you can get some exposure to some of these trusts or soon coming ETFs in the space. Love it. All right, well, moving right along, one of the other categories that I think is important to mention is crypto equities, right? So there's some stocks traded on the S&P 500, New York Stock Exchange, NASDAQ, these major exchanges that have ties, links into the crypto world. And you can take advantage of the growth in the crypto world by maybe owning some of these equities and stocks. One, for instance, our friends over at Coinbase. Yeah, it's a pretty big, obvious one, right? That's Coinbase, as our listeners probably know and are familiar with, is one of the largest exchanges in the world for crypto. It's a centralized exchange, a centralized company. They are very successful, and they had their IPO almost like a year ago, maybe more than that. So that's their symbol is coin. And you can buy their, shares in their company. And I think, if that's definitely one way to get some easy exposure right away.
Yeah, they came in the scene a year ago right around 350 a share, and now they're hovering around 250. So it's seen some ups and downs, but it's been a pretty steady point right now. More centralized, like you said, they are a centralized exchange, so our listeners will recognize, that that's one end of the spectrum compared to the more decentralized exchanges. But this is the on-ramp, right? This is getting people from fiat into crypto. So we need exchanges like these.
Yeah, and Coinbase is going to be around for a while. I don't see they're a major player in the space now. They're pretty well established, and I mean, they are the beginning point, their starting point for a lot of people's crypto journey. There's a lot of people who their first foray into the world of blockchain and crypto is through signing up for a Coinbase account.
Yep, where they have custody of your assets, which is, you still have that one ETH, and when that one ETH gets to be whatever X, 5, 10X, you still have one ETH with them.
Yeah.
So it's a safe way to get exposure. So.
It's a safe way to get exposure, but, just saying, regardless of the fact that they're centralized companies, the fact that they're just they're established on-ramp. The people use them. I know a bunch of my friends that, that are not quite down as far as the crypto rabbit hole as I am, but they all have Coinbase wallets, they'll have Coinbase accounts. So it's and then if you think about where Coinbase is headed, they have big plans to become NFT native with an NFT marketplace. They have big plans to be around in the ecosystem. So that's an easy way on, through a regular brokerage firm, you can buy some Coinbase stock and hold on to that.
And what's nice about them is you can send those funds to crypto wallets, which not every...
Well, I'm talking about owning the stock.
Oh, right, yeah, thank you.
You can't send your stock to
yeah,
crypto.
Sorry. I was just saying there's other exchanges where they're not as easy to send cryptocurrency to a wallet, like Robinhood for one. I'm pretty sure if you buy...
Well, yeah, so there's a difference between... We'll get into that. So there's a difference between... We're not really talking about buying crypto with Coinbase right here. We're just talking about buying the stock of Coinbase and holding that in your... Like if your Fidelity, your Wells Fargo brokerage firm, whoever you use, JP Morgan, you can just buy some... Yeah, you can just buy some stock in Coinbase. But what Cash is also talking about is if you wanted to buy some crypto with Coinbase, it's a pretty easy exchange then from to take that crypto and then go to a crypto native wallet. Coinbase even has their own Coinbase wallet. So it gives you a way to, because we have to go from fiat to crypto. We need a bridge to do that. That's just how things work right now. So Coinbase is that first mover for a lot of people.
Okay, so if people want to get some stocks and some other exposure in crypto, you'd say maybe some Bitcoin mining operations?
Yeah, I mean, people can argue about whether it's good for the environment or not, but a lot of the Bitcoin operations are moving to cleaner energy sources. But our listeners may not realize, but yeah, there's a bunch of companies that all they do is set up mining operations around the world, and you can buy stock in these companies. And so one is the Power and Digital Infrastructure Acquisition, and their symbol is XPDI. There's Marathon Digital Holdings, which is MARA, MARA symbol, and there's Riot Blockchain, RIOT symbol. So those are just a few of the mining companies to consider.
And between the three of them, they have close to $15 billion in market value. So pretty good size for the top three right there.
Yeah, and I mean, one thing to keep in mind is that with the mining companies is that they can get disrupted, as we saw in China, how China essentially banned Bitcoin mining, and a couple of these Bitcoin mining companies had to shut down their operations and just completely move. So so what that does is, for a while they're not mining when they're moving, and so their revenue goes down, and then they have to spend all this money to set operations back up. So there is, there's some risk there, right? Because they are operating in this meat space, physical world, and so they do have these kind of challenges that can happen with regulation or with we have these supply shortages going on with the pandemic, and Bitcoin mining operations, they use ASIC GPU mining machines, right, which is a specific hardware, specific special computers that you need to do this. And if there could be supply shortages, there could be all sorts of kind of things that were unforeseen, things that could happen as far as the production of mining rigs. So I don't know if I would bet a lot of money on my on my portfolio on the Bitcoin mining companies, but it's definitely one way to get some exposure.
And there's some pretty big gains that those companies have been seeing too. So something to look into for sure for some bigger exposure. We were talking about some ways to maybe purchase crypto, but not necessarily take custody of it. So there's a few other fintech apps, Colin, that people could do that with.
Yeah, I wanted to touch on it. There's two other companies I just wanted to touch on real quick before we get to those. Is the MicroStrategy Incorporated, which you might have heard with is Michael Saylor's company. With he's the CEO, and he's the one who, when he buys Bitcoin, he always advertises it. He's always like, he just keeps buying Bitcoin. He's the world's largest public traded corporate owner of Bitcoin with over 114,000 Bitcoins. Saylor said in MicroStrategy's third quarter earnings report. And that was before the recent dip that we just had. And I think Michael Saylor just said he bought another 1,400 or so Bitcoins.
Yeah, I think I heard that too.
So now that number's like definitely under what he has now. So they own, I don't even know what percentage of Bitcoins they own, but they own actually like I would say like almost 1% of all the Bitcoins in the world or something. Not 1%, but 0.5%. Or, I mean, it's mind blowing how many Bitcoins, they have.
Wow.
Yeah, it's pretty, you're just like, guys, buy something else, but it's working for him. So anyway, that their stock ticker is MSTR. So, that's another option. And then lastly, but not least, is NVIDIA Corporation. And they are a company that makes the chips to power the units in GPUs that mine for mining rigs and whatnot. So it's another like play on the infrastructure, right? So there's if you're not necessarily going to buy the asset, you can buy stuff that's like the infrastructure, like the shovels and
don't dig for the gold. Go
sell some shovels and picks, right? Sell some Levi's jeans. All right, well, let's dive into the fintech apps.
Yeah, so we mentioned it a little bit before, if you're going to take custody or not of your assets, and if you don't want to, which is the meaning of this episode, kind of let you have that easy exposure. There's some fintech apps, one such being Square Inc., and it's renaming itself Block, actually. So what do you think, Colin? Are they trying to do some marketing there?
Oh yeah, they want to definitely establish themselves as blockchain native, crypto native. And Square is also owned by CEO Jack Dorsey. So he's the CEO who just stepped down from Twitter. And, he was a dual CEO of Square and Twitter, but now he is fully focused on Block, formerly known as Square. And Square, if you're not sure, Square is behind the Cash App. So, a lot of us have used the Cash App before. It's super easy. It's, mobile friendly. You can just tap your couple buttons and you're buying crypto. You can hold, it has, Bitcoin on there. I don't know I think it has like 5 or 6 different tokens. But I have a feeling that they are going to make a much bigger play into the crypto world now that Jack Dorsey has said that he is focusing solely on this kind of space. But he is a big Bitcoin bull, so I'm curious to see, how the Cash App develops its crypto offerings, and if they are biased in what they offer, or do they let it be more open market. One thing that you did mention before that we should touch on is right now, like if you buy crypto in your Cash App, like you can't transfer it anywhere else. It just lives there. So you can buy it, you can sell it, but you're not gonna be able to transfer that to another wallet.
Right.
At least as it stands now. Who knows what I have a feeling they're gonna launch a wallet feature.
Yeah, and that was the same with like a friend who tried to buy off Robinhood, and that's more of you're almost buying them as stocks almost at that point, and then you can cash out and get money for them, but you can't actually send them to a customer.
Yeah, because this is non-custodian asset management here, right? Mm-hmm. So you're having Cash App, which is Square, or you're having PayPal, which is the owner of Venmo. They are buying the Bitcoin for you, holding it for you, and then selling it for you. So that's the thing to remember, that this is non-custodial. It's not yours. It's Square's. It's Square's and PayPal's.
Which we're trying to always encourage our friends to take custody, because what happens when there's that really cool NFT that all of a sudden you realize you have to have, and you realize Coinbase has all your shit, you know? Like,
well, you quickly transfer it, of course.
Yeah, Coinbase, you're lucky because you can.
Yeah, so PayPal, the competitor to Square, they are another payment system that we're all familiar with. Their CEO, Dan Schulman, called the shift to digital forms of currencies inevitable in a press release statement. And another thing that they're able to do in Venmo is you can buy a few other crypto tokens like Bitcoin, Ethereum, Litecoin. And, everyone uses Venmo. That's the thing, right? I remember when I first opened up the Venmo app, and I was like, oh, look, buy crypto. There was like a buy crypto button. And you're like, oh, wow, Venmo's getting cool.
Yeah.
And, I was listening to a podcast with some fellows that work with Visa, and they were saying pretty much, and there was also someone from Square, and they were saying pretty much when you add crypto into your fintech app, engagement across the app overall goes way up, because people are using the app way more to check their crypto, because crypto's volatile, and because they're opening the app to check their crypto, then they're also using it for all the other features, like the banking features or the payment features and things like that. And some people say, oh, the volatility of crypto, it's such a bad thing, blah, blah, blah. But he was making the argument that the volatility of crypto is a feature, not a liability, because the volatility gets people to open their apps more and check the prices of their crypto, of their assets. And because they're checking the prices more, they're just in the app more engaged doing other things. And so these companies, these fintech companies, love adding crypto. They've actually noticed that if you add crypto to your fintech app, it just makes more money. Like, I think Square made 13% overall revenue from the previous quarter because they added the crypto features.
Wow.
Yeah. So if you want to boost your app, just add some crypto features and you'll get your app to do a little better. But all of these, right, I think we talked about it before, there's the DeFi mullet.
Right. Yep. Business in the front, crypto in the back.
Yeah, so I think that's like the trend that we're seeing with a lot of these companies.
The traditional financial institutions getting crypto.
Yeah, and they're going to do it with the DeFi mullet, right?
Mm-hmm.
Because the average person that wants to come into it maybe doesn't, like we said, doesn't want to get a seed phrase and the 12 words and the private keys and the clunky wallets right now. So why not have a 2-click, Cash App, buy some Bitcoin, done.
Right. You have exposure to Bitcoin, and if it goes to 200,000, you're stoked because you were exposed to it.
Yeah.
Yeah.
So you can get easy exposure. They manage some of the other risks for you. They take a cut because of that, but that's going to be the way that a lot of people get into this. So they'd have the normal kind of Venmo, Cash App experience on the front end, and on the back end, you're going to have all these crypto DeFi features that people can explore. You can still make some of the revenue and some of the gains that you'll make from those features, but have it in a much more streamlined kind of user friendly way.
Yeah, and that's a good thing to remind, is that there is still some rewards, but there, with the risk of taking on your own private keys, you can access decentralized finance, which, like you said earlier, you become your own bank, which then gives you access to a lot of financial tools and earnings that are outside of your wheelhouse if you don't take full custody and get your money into DeFi. So obviously we always recommend people taking that next step once you're comfortable with it, once you've done your research. And then once you do actually have custody of some of your Ethereum or Bitcoin, you can go and use it to participate in an ETF, or there's some crypto funds where you actually need crypto to buy them, right?
Yeah, so I love that segue, because we're always telling people about this world of decentralized finance, and to access the world of DeFi, you have to take custody of your assets. You have to have a crypto wallet, like a MetaMask or a Coinbase wallet or a Rainbow wallet. You need to have your funds in there, so then you can go to these other websites, these other crypto apps that live on these blockchains, and explore them. So some of those funds that are some really easy ways to get access and exposure to crypto is the BED index. and that's Bitcoin, Ethereum, and the DeFi Pulse Index. And that's created by a DAO called the Index Co-op. So they're a DAO that creates indexes, which are essentially collections of different assets. And then they put that all into one kind of token, and then you just buy that token. So the BED index was put together by the Bankless team and the Bankless DAO, and that's a nice way to sleep comfy at night because you have the two crypto monies, Bitcoin and Ethereum, and then you have exposure to the decentralized finance layer, the Bankless layer, which is the DeFi Pulse Index, which is like Uniswap, SushiSwap, Curve, those type of companies.
Yeah, I got into BED a few months ago, and I'm happy about it. So it's good exposure.
Yeah, you got some of that BED head, I can tell.
Yeah, right.
Yeah, and then we mentioned the DeFi Pulse Index. So that is a collection of about 13 to 16 DeFi tokens, different protocols. And then there's the Metaverse Index, MVI, which is a collection of about 15 different tokens from the metaverse companies like Axie Infinity and Illuvium and Sandbox and Decentraland and all those other cool ones that are kind of you're hearing about now in the whole metaverse hype that's happening.
Yeah, I think that's going to be one that I'm actually looking towards because I want exposure into the metaverse, but how do you know which one to buy, right? And they're doing that work for you. They're taking the top 15 and giving you exposure to all of them.
Yeah, because it's a exciting space, but it's really hard to pick out like which ones are gonna do well because it's such a new space too, and so just having one that just takes a collection of that whole area and then you can hold that whole kind of sector together. It's a great way to get into it.
Yeah, we like our index funds.
All right, well, Cash, what are you excited about?
Well, I'm excited for our next episode about DAOs, which isn't something that Homer Simpson would say. Wrong sound. Decentralized autonomous organizations. We're excited about them. We both created one, and we want to tell you more about it. So we're going to cover that in our next Nifty, and then another deep dive into DAOs. So, come learn about how to make the next future organization living on the decentralized internet.
Awesome. Can't wait to talk more about DAOs and how they are reshaping the way that we organize around shared values and shared goals.
You.
All right. Well, we're going to wrap it up for here today. Thank you for listening, and we hope that you enjoyed this episode.
Yes, thanks for exploring the world of blockchain with us.
Crypto is changing the world. We're here to ensure that you're ready.
Please do remember that none of this was financial advice. And please do share, subscribe, and leave us a review.
We look forward to sharing our next episode with you.
Cheers.
Cheers.